workshop where we are helping you get relevant, practical information you can apply in your business today. In November, we had our very own Phil Chun talking about leveraging technology to strategically hire in the right now times. So if you missed that last workshop, please check it out on our YouTube channel. And if you're attending live, a link will go out in the follow-up email so you can check it out there. Today we have James Timar, an enrolled agent, CPA, and owner of Ferguson Timar and Company. He specializes in tax preparation and tax planning for small to mid-sized businesses. James lives in Brea with his wife and 2 daughters and is one of the most responsive CPAs I have ever worked with. I am always impressed when I send an email and I get a response. So with that, James, I first want to just give you a chance to, briefly introduce yourself and tell us just a little bit about your firm.
Yeah, so like you mentioned, CPA, EA, just have a small CPA firm here in Fullerton, and really just kind of communication focused and trying to help people out.
Awesome. I love that so much. Well, today we are going to pepper you with all of our tax questions in the most insane tax year maybe in the history of ever. If you guys have any questions, please put them in the chat. I have a list of questions that I am going to start with. So when you're talking to clients that are looking for tax planning, how are you helping them do that this year?
So there's some kind of basic staples, specifically for business owners. There's always the common looking at your year-to-date financials, projecting it out, kind of coming up with a baseline of what your estimated tax liability would be, and then trying to come up with ways to bring it down. This year, there's several curveballs with regard to PPP loans that may or may not get forgiven for people. As of right now, the IRS is saying that's taxable. So that's a big curveball. There's other things with regard to the EIDL grants, payroll tax deferrals, a lot of different things. So it's really depends on everybody's situation. But yes, there's a lot of different things going on this year.
Okay, well, you touched on several of the next questions that I'm sure everyone is wondering about. So with the guidance that is currently available, so this obviously will change tomorrow, what do we know about how the PPP program or the loans are being treated from a tax perspective?
So the most recent guidance says that for PPP money, if you've applied for forgiveness, even if it hasn't been granted yet, but you can reasonably expect to receive forgiveness on that money or any certain amount of money, then you cannot deduct the expenses that you paid using forgiven funds. It's a funky way of basically saying the forgiven money is going to be taxable income to you. So yeah, you could apply today, not hear back from the SBA for another 3 months, but technically you should budget for that being considered taxable income.
So do businesses need to file for the forgiveness in this calendar year, if they're on a calendar year, to be able to say that they reasonably expect that? Or is that just you reasonably expect it whether or not you've asked for that forgiveness?
So according to my interpretation of the most recent guidance, if you haven't even applied yet, then you don't need to include that. But if you apply, say, in February, and you haven't filed your business tax return yet, and at that time you can reasonably expect forgiveness, then you should still include it as part of your 2020 tax return.
Got it. So it's not necessarily like everyone needs to run out tomorrow and go fill out a forgiveness application. It's more just about whether you reasonably expect that it will be forgiven.
As of right now, yeah.
As of 2:10 p.m. on December 3rd, 2020, this is the most current advice that we have to work
Exactly.
with.
And Congress has said that that was not their intention and that they want to change that. When and if that happens, nobody knows. So for now, we're just saying budget for it to be considered income, plan accordingly.
So selfishly, I want to ask then from, a bookkeeping standpoint, what is the best way to record those PPP funds? Is it, to record that as other income, to break out the actual expenses, like, selfishly for us, but also for, business owners that are doing their books, how do you account for those funds?
There's not really an easy way to do it. I mean, the easiest way for bookkeeping purposes would be if it's not officially forgiven, you can leave it as a loan on the books. Just make sure that you're communicating with your CPA or tax preparer about the status, when and if you have applied for forgiveness, whether or not it's been granted, and sort of the expenses that you use the PPP money for. So for tax purposes, you can get it right.
Got it. And it also really helps if you have a CPA that's really great at communicating back.
It
That's
helps.
it helps a lot. What about the EIDL grant? So the EIDL loan is a loan like a typical loan from my understanding, but the grant is taxable income, not taxable income. What does that look like?
It's taxable income. Yeah. So the grant's free money. The IRS doesn't like anybody getting anything for free. So technically that's free money, but there is the chance that your EIDL grant can affect the amount of PPP loan that's forgiven. So it's possible that it will reduce the amount that's forgiven for you. And if that's the case, then that idle grant is considered still a loan that you'll have to pay back. So if that's the case, then you don't consider it income because you'll be paying it back.
Got it. So if you have a PPP loan and an idle loan, would you recommend kind of recording both the grant and the loan as a loan and expecting that you'll probably have to pay those back if you get the PPP loan forgiven? Or is it that some of the PPP loan becomes a loan and the idle grant is income?
So it's all kind of mixed together. So I think the easiest way would be to consider the grant as income, and then just whatever's not expected to be forgiven on the PPP, if it's affected by that grant, then that will remain as a loan, and then a little extra work for your CPA or tax preparer in determining what to or not to deduct.
I think a little extra work for your tax preparer is also the theme of 2020. So
We don't want to get
we're
bored.
we're really glad to have you guys out there doing it. What about changes in net operating loss?
So as part of the 2018 tax law changes, they reduce your ability to carry back net operating losses. As part of these CARES Act, stimulus packages, they did change it. So they're allowing businesses that have net operating losses to carry them back 5 years. So if you have a business loss that exceeds any taxable benefit, that generally creates a net operating loss. So if that's happening in 2020, you can carry that back 5 years to reduce your taxable income and therefore your tax liability and get some of that refunded back to you.
So if you already filed those prior year's tax returns and you had to pay taxes, this would allow you to kind of put that against the taxes paid and get a refund. Is that right?
Exactly, exactly. So it's almost like amending a return to reduce your taxes, and then you can get that refunded. There's some different special forms you got to fill out, but it is a way to go back and use your current year losses to basically use that as a deduction for previous year tax returns.
Got it. And if you haven't done those previous year tax returns, this year would probably be a really great year to get that caught up.
Yes.
Awesome. What about people who filed for unemployment this year? I know that that's a lot of people, the goal of the PPP loan was to keep as many people still employed as possible, but that just isn't necessarily the case for everyone. There's a lot of people getting unemployment benefits. How is that treated when they go to file their taxes?
So a lot of people forget that unemployment benefits are taxable. So a lot of people don't have taxes withheld from it. For federal purposes, they're going to tax you on that. It's reported on your tax return. So If you did not have taxes withheld, I would budget, set some money aside for a potential tax liability. If you did have taxes withheld, it might be a good idea to just kind of do a checkup to make sure you had an appropriate amount of withholding.
So if someone was on unemployment, would that be a good idea to maybe check in with their tax person and kind of see what that's going to look like for this year?
Definitely, definitely.
Yeah. I that is so stressful to me because I can imagine a lot of people didn't factor that in and now are going to be kind of hit with that. This is pure speculation, so we won't hold you to this. Do you think they're going to be any kind of, addressing that, or a second stimulus package that might alleviate some of that for, people on unemployment?
I don't think it's likely that they're going to do anything to sort of change the taxation of unemployment benefits, just because that's always been the case. I suppose it's possible. I just don't see that happening. I haven't seen anything even hinting at that. So
Got it. What are some of the other questions? I'm sure we probably covered the most frequent questions you've gotten this year. What are some other questions that you're getting from business owners?
um, a lot of it is really, regarding PPP. That's the biggest one. Um, I'd say that's the biggest one that really comes to mind. It's just how to handle that, when to request forgiveness. Is it going to be considered taxable income or not? I would say that's definitely the biggest thing.
Did you get a lot of people asking about whether they should do the 8-week period or the 24-week period? And did they have to decide that when they got the funds? Can they decide it after the fact when they're kind of looking back at things?
Not a ton of questions about it. I mean, most people just automatically decided to go with the 24-week period just to keep it safe. And it wasn't something you had to decide at that time. So it's pretty open-ended with regard to choosing 8 or 24 weeks. So I just would pretty much, if somebody asked about it, I would just say do the 24 weeks, just be safe, and that also allows you additional time to apply for forgiveness. I mean, you have the either 8 or 24-week period, and then another 10 months on top of that to apply for forgiveness. So it gives you a lot of time.
Yeah, definitely. I think the only client we had that, really specifically did that 8-week period on purpose was also kind of figuring that they wanted to ensure the full-time equivalents all match the same, not knowing at the time, are we still ultimately going to have to lay people off? So that probably is something that, owners will want to keep in mind as you're electing that period, is just making sure that you had the same number of employees, depending on whether you go with the 8 or 24. But yeah, otherwise, I totally agree. I think the 24 weeks, especially if, you have payroll and rent and other qualified expenses that you can deduct from that. Is there still time to do 2020 tax planning? I mean,
Not
we're
a lot, but
getting
some.
we're getting close to the end of the year now. Like, are you getting those calls to kind of look at year-to-date numbers?
Oh yeah, yeah, a lot more than usual. But yeah, there's still time. Not a ton, but if that's something that you feel is important, and I think specifically for business owners, it's pretty important this year, then if you haven't already, reach out to somebody.
Amen. Preach. Um, what about businesses who are now working from home that maybe never did before? How does that home office deduction get treated?
Yeah, so that's going to be kind of a big thing. So if you're a business owner, then depending on the entity type, it's not a huge deal. As long as you're regularly and exclusively using a room or section of your home for business purposes, then that's a new deduction for you. The hard part is going to be for employees. If you're not a business owner and now you're forced to have this home office, that maybe you're not being reimbursed any type of expenses, for federal purposes, you can't deduct that. Only for, if you're in California, you can deduct that if you have enough itemized deductions. But for federal purposes, you're kind of SOL.
Do you have any recommendations for business owners that now have team members working from home that maybe never did before on what kinds of things they maybe should think about reimbursing?
I mean, that's kind of up to each individual business owner. I think it would be fair, in my personal opinion, to do something like that. But I don't, from a tax perspective, it might be a good incentive and you get a deduction for that. So that helps. But, many businesses are just kind of barely hanging on right now, just doing whatever they can do to survive. So it's really case by case.
Totally. What about a business who has an office but is now working from home, but they're still paying the rent of that office? Is the rent versus home office kind of an either or can they deduct a home office if they still have a proper office?
So if they're working from home because of COVID restrictions, maybe they can't come into the office, maybe they're not an essential business, California is really being affected a lot by that, then you could still deduct both. But if, you have a perfectly good business office location and you just don't feel like going in anymore, you like working in your pajamas at home, technically, the home office deduction is supposed to be regular and exclusive and for the benefit of the employer. So in this case, if it's just for the benefit of you, just because you like working from home, technically you're not supposed to be able to take both, but it's
I love the technically you're not supposed to fill in the blank, but shrug. That's James's professional advice, everyone.
yeah.
We do have a couple of clients who have had, they have SBA loans that they had kind of pre-COVID. They were told they didn't need to make payments, but now their balance reflects almost as if they have made payments. How does that get treated from a tax perspective?
So that's going to be interesting. So they actually made your payments for you for 6 months. So what I've heard, the SBA or banks specifically, because the banks are the ones that service these SBA loans, they're going to be issuing you a 1099 for the payments the SBA made on your behalf. So what that means is basically those payments that the SBA made for you is going to be income.
Got it. Okay, so as we're kind of seeing that, that's maybe some like other income to record or got it.
Right,
That is super helpful because we have had we have seen that a few times and been like, eh.
right. Yeah, that could be an accounting nightmare because it's like just phantom money moving around. And of course, we live by debits and credits. So
It did not reconcile and it was very uncomfortable for us.
yes.
um, just on a kind of more personal note, how has your firm been affected by, by COVID, by lockdown? Like, have you guys done anything differently this year?
Yeah. So we just again, as of this week, locked our doors again. So we are still coming into the office, but we're not letting clients or anybody else come in. So we've been forced to learn new technologies like Zoom. I've never been good at this before. I'm still not good at it, but I'm doing it. And just having everybody, mail, email. We have an online portal, for all sensitive tax documents and things like that. So a lot more phone calls, a lot more Zoom meetings and emails. But yeah, that's probably the biggest difference.
I think you're doing great at Zoom. I feel like you're crushing it. What about have you guys done any, any new offerings, any kind of expanded offerings? Have you done additional services for clients because of all of these new, programs this year?
Um, Unofficially, yeah. we've always kind of just tried to help in whatever capacity we're able to and feel comfortable doing. So we've helped people apply for EIDL loans, PPP loans, assist in the forgiveness process of the PPP loans. I've even helped people apply for unemployment. So, but not as like a formal kind of structured offering. It's just whatever people are asking for, we'll help if we can.
That I love that. That is basically been our stance this year. Is like, okay, we just want to help you guys. You need reports we've never run before? Sure, let's do it. Let's figure this out. And I love that kind of attitude of like, we're all in this together. We're all trying to navigate something that none of us saw coming. So
Right.
here we are. What other resources have you used? Maybe you mentioned Zoom, which I imagine was not something you guys were previously doing. Have you done anything else, to kind of keep things moving that you didn't do before?
Not really. I mean, we a few years ago got like an online secure portal for people to, securely send us digital documents and things like that. We've used that more than we have in the past, just because more and more people were forced to, scan and, send us digital documents that maybe they didn't want to email. So, but other than that, not a lot of different things.
Just keeping on, keeping on.
Yeah.
I love it. Do you have any other recommendations for business owners that are, seeing the holidays looming, seeing year end sneaking up on us? Do you have any other kind of advice for them?
Just budget accordingly and communicate with your accounting and tax professionals. Communication is the big thing. Don't just assume that your CPA or tax preparer is going to reach out to you offering advice unsolicited. So that's probably the biggest thing.
Yeah, I have definitely found that to be the case. Like most CPAs that I know and work with, like they're a wealth of knowledge and they're also very humble and they're not just like going to shout their advice at you. They're happy to give it if you'll ask for it. They're happy to share what they know. They're not going to force it down your throat. So like you do you on that. Definitely reach out. We did have one quick question in the chat about that deduction for employees for the state of California. Is that for W-2, for 1099? Like what does that look like?
So if you're a 1099 subcontractor, you technically have your own business for tax purposes. So there's no real effect with regard to deducting the home office and things like that. So it really only applies to W-2 employees. So when these tax law changes came out beginning with 2018, for federal purposes, they eliminated all miscellaneous itemized deductions, which included unreimbursed employee expenses. So that hurt a lot of people not being able to deduct mileage, cell phone, home office, all of those things. California did not conform to a lot of those changes, specifically that unreimbursed employee expense deduction and the miscellaneous itemized deductions. So even if you can't deduct these things for federal purposes, which for most of us is going to be the highest tax burden, you can still deduct it for California purposes.
Awesome. So if someone is a W-2 employee that is now working from home for the first time, this might be a really great year to talk to a tax pro.
Yes, absolutely.
Well, I feel like this is a great year to talk to a tax pro, regardless of your situation. It is unprecedented times, and getting some expert advice is definitely in order this year.
I think so.
Awesome. Well, I don't see any other questions. So I just want to thank everyone for joining us today. If you are interested in connecting with James, because it is a great year to talk to a tax pro, we are going to switch over to the next slide with his contact info. And we'll also include that in the follow-up email. So you can feel free to reach out to James with all of those additional tax questions. Yeah, I just just always appreciate your knowledge and expertise and willingness to share it.
Of course.
So we are going to be changing the format of our workshops starting in January of next year. We will still be interviewing experts like James in their fields and recording it, but we're going to ditch the live format and just kind of have it be a little bit more on demand as people have time and flexibility to be able to check that out when they have a chance. We still want to give you opportunities to ask questions, so we'll be announcing how you can engage in that in our next newsletter. So if you're not currently getting that and would like to, please let us know. Check out our website and you can register for that. We'd be happy to add you to the list. James, thanks again for being with us today.
Thanks for having me.